There's really only two reasons we'd ever sell a disruptive tech stock. First would be if our thesis changed, or second would be if growth stalled. Now, today we're going to take a look at Dexcom, not in the context of selling, but in the context of buying the stock. So they've had a tremendous run so far in terms of the revenue growth and the novel solution that they're selling to diabetics, but we're interested to know what sort of upside still remains for this firm. So a bit of background here. We first covered Dexcom. This would have been several years ago, I believe almost a year to date or 2 years to date. And we have the stock listed as a like in our tech stock catalog and our tech stock report. And a like simply means that we would consider buying it. And we had concluded several years back there was plenty of growth and opportunity in front of Dexcom. We said that we may look to open a position on a dip. Well, that dip is here. So you can see here I pulled up a 5-year chart of the company, and the share price has corrected significantly. And we'll look a little bit later at the valuation. But today we're going to start out by talking a little bit about diabetes and to make a point how important diet is for diabetes. I pulled up this interesting chart that shows the top countries. I only pulled 10 and screenshotted it. The top countries with the highest rate of diabetes. And there's a commonality with 70% of these countries. And I wanted to refer to one in position number 4. That's Nauru. So the picture you see here, I took that flying into Nauru, and that's one of the smallest countries in the world. I actually jogged around that island. While I was there, I stayed with the health minister and learned a lot about the problems that that society faces. One being that they have more obese people as a percentage of their population than anywhere in the world. 60% of the people there are obese. So you can see that also leads to high rates of diabetes. Why? Because they don't have the area to grow fresh vegetables. So pretty much everything that they eat is imported. And when they do have imported vegetables, they're so expensive that we took a container growing solution and looked at how they might be able to grow them there. It actually wasn't economic, but the vegetables are so expensive that nobody can afford to eat healthy. They eat most of their food out of cans, which should tell you something about canned food. And as a result, they have a lot of problems. It's actually used to be one of the wealthiest countries in the world. That's an interesting story. There was a fella there that ordered a Lamborghini, and when it got there, he paid about $1.5 million. He couldn't fit in it. So it's a really interesting place. And I just wanted to draw attention to the fact that diabetes is a problem that can be solved to a certain extent by modifying your diet. So people that have diabetes need to go through a whole lot of work to maintain it. So here's a good, not good, great chart that shows the value proposition from Dexcom. So this is called continuous glucose monitoring, and it is what it says on the tin. You can see this line here, right, going from left to right, showing the glucose levels, and then you can see 3 dots, the red dot and 2 orange dots. That shows how somebody would be reading their glucose levels if they were doing the traditional finger prick method, so a single point in time. And as Dexcom says, intermittent gluten, or say intermittent, that would be referring to when you stick your finger with a lancet, but intermittent glucose monitoring is not nearly enough. And here you can see one of their happy patients talking about how great the solution is. And one of the many commercials that you'll see on television in the United States where over 3/4 of Dexcom's revenues come from. And that's what we're going to talk about right now, the total addressable market for what we call intensive insulin therapy. Okay. That's where patients have to inject themselves with insulin. All type 1 diabetics have to do that. That's a population of 1.6 million people. Then you can add to that about 7.4% of type 2 diabetics that have to inject insulin. So that gives you a total population of what we call IIT patients in the US of 4 million. Now, the chart below there, that was taken from a Dexcom investor deck, and those numbers mesh with our own research. And this represents the total market penetration of all continuous glucose monitoring companies. So around 25% of these IIT people in the United States already are using a continuous glucose monitoring solution. Of those, you have, as we said, US type 1, US type 2. So for type 1, it's between 40 to 45% penetration, and type 2 is around 15%. Now, we used the penetration number for type 1 in the midpoint, so 42.5%, and we did some estimating that makes this more accurate. So a firm called SVB Leerink, they did a survey that expects type 1 market will be fully penetrated at 74%. In other words, not everybody's going to adopt this solution, right? There's a certain percentage that you'll be able to capture. Well, they claim that 74%, and Dexcom actually pegs the number at 80%. So they're not that far off. That's for type 1. Type 2, IIT, again, penetration expected to peak at 55%. So that's not a lot of uptake there. And if we're assuming those numbers are correct, then we can do some back of the napkin math, and the actual market penetration based on what's available looks like this. So you have type 1 is already 57% penetrated, type 2, 27, and as an overall population, 41.5% penetrated. So that we can use to extrapolate out what we think the growth might look for Dexcom. Now, what you need to consider is that Dexcom is one of the largest players, but they're competing against Abbott, who is the largest player, at least in terms of market share in 2020, according to one source we found. And their market share was 30% compared to Dexcom at 20%. We also found an article that talked about how Dexcom and Abbott are continuing to grow at varying paces in terms of their ability to capture market share, but the other players like Medtronic are actually losing market share, and that's a real problem. Now, what these two companies also have in common is that they're locked in legal battles. This is quite funny. So they went to court in 2014, and they decided they weren't going to sue each other until 2021. And as soon as the expiration was out, they sued each other again, and both companies are looking to block the other from selling their product, and they want damages and all this. So that's what you typically see in a market where there's a lot of, let's say, gold to be captured, that companies will then take it into the courtroom and try to have legal battles. So the actual TAM for Dexcom looks a lot different. Now, all things being equal, Dexcom has realized 41.5% of their IIT potential in the United States. In doing so, they had 2021 revenues of $2.45 billion, upwards of 80% of that from the sale of disposable sensors. We love companies that sell disposable things, consumables, stuff like that. It's very, very high margin typically. So we can then estimate the remaining potential for Dexcom at around $3.45 billion, giving them a $5.9 billion a year business with gross margins in the high 60s. Now, there's additional growth outside of just the $5.9 billion that they can capture from the IIT people in the United States. They can also go looking abroad. And here in green, you can see what they describe as core market. So this is a $500 a month product that's without insurance. You're not just going to be selling it to any emerging market. So Dexcom is looking at these core markets that you can see here in green. There's 10 million people in their core market, at 6 million outside the US. So that's an additional 6 million that they can target. And the thing there is that Abbott is competing on cost. So they're at $160 a month solution. So it remains to be seen how price sensitive people will be. And then outside of that, if you expand across the entire globe, there's a 13 million patient population that you can add as well. Again, the company that has the more favorable price point is probably going to do better going into emerging markets. Now, the other thing that Dexcom wants to do, or claims they'll be able to do, is sell their solution to the 30 million type 2 diabetics in the US who don't inject insulin. Now, this was an article, it's a good read, and I'll put a link to the research piece that we used for this video alongside our previous piece on Dexcom and a couple other pieces, one relating to diabetes cure, and the other, the Naru article for indoor farming, just in case you're interested. But this article is quite good. It's linked to in our original research piece, and experts are questioning the usefulness of this expensive platform for this demographic of patients. Now, of course, Dexcom and others are doing studies that they're paying for that show the benefits of their platform. Of course, is anyone surprised at the outcome there? But it remains to be seen if this 30 million patient population can be exploited by Dexcom. Now, the other thing to watch here would be this. We've talked before about the artificial pancreas. Well, that's simply a device that can inject insulin as needed, and they call them insulin pumps. You can see one here that's quite discreet. That couples with Dexcom, so the two are integrated, they work together, and the patient would wear both. This was recently announced by Dexcom, and interestingly enough, Bloomberg's had some acquisition rumors in May of this year about how these two companies may be joining forces. Dexcom's a $34 billion firm, Insulet's around $17 billion. So both firms have same gross margins, high 60s, and they're both selling disposable solutions. It looks like a match made in heaven, but we haven't seen any updates relating to that. Rumors are, of course, just rumors. But what you also see Dexcom doing is connecting with most players in the insulin delivery space. So just a few things to touch on that didn't really fit on any other slide. Medtronic is really disappointing. So we've been investors in Medtronic for a long time now, and 7.4% of their 2021 revs came from diabetes. That's down. The total number was down 3% from the year prior. That's ridiculous. This is Medtronic, a medical device firm. They should be able to enjoy the growth of continuous growth monitoring, because as you can see on the right, they sell both a sensor and a pump system. Now, my understanding is that sensor needs the patient to calibrate it with Lancets. What's the point, right? So if the patient still needs to do what they did before to keep the instrument operating correctly, that's not something that most people, I think, would find appealing. But you can see here they also have an insulin pump system. But the fact that they have these products and they're not growing is just a real shame. And another point to make around medical device companies and the likes of Stryker, Medtronic, is J&J had exited diabetes monitoring in 2018, presumably because they saw they couldn't compete with the likes of Dexcom. So old school monitoring methods, I think Roche sells some of the more popular Lancets. Those are going to take a hit. And of course, you need to consider when you're investing in a firm that only targets a single disease, what if that disease gets cured? And we published a piece on the cure for diabetes. As I said, I'll put a link to that in the description. And here's one instance I wanted to note. This is CRISPR Therapeutics. They're working with ViaCyte on using gene editing to allow patients to create their own insulin, so to essentially cure diabetes. Now, ViaCyte weeks ago was acquired by Vertex, who is also developing a diabetes quote unquote cure, VX880, and 3 patients have been dosed in the study so far. And it's notable that Vertex also works with CRISPR Therapeutics, I believe, on the sickle cell disease problem they're trying to solve. So in thinking about going long Dexcom in our own portfolio, I pulled up this chart here. This is from our 36 tech stock portfolio. These are the breakdowns of size and category weightings. We're really overweight life sciences in tech right now, and that's not something that we're looking to get additional exposure to. Dexcom we would consider perhaps if we sold one of the positions we already have in life sciences and wanted to replace it, but this is not a firm that fits well into our overall weightings when it comes to categories. Now, the other thing to consider is our investments in Stryker, Medtronic. Those are part of our dividend growth portfolio strategy. Those represent about 3.5% of our total assets under management exposure to medical devices, and that's excluding the likes of J&J. But we concluded the same thing with Dexcom that we did for Intuitive Surgical, and that's that an investment would increase our tech exposure to life sciences, which already sits at more than double our target weighting. So Dexcom isn't a firm, we like it, but it's not a firm that we would consider going long for those reasons. Now, when you look at valuation, this is quite interesting. Look at how those top 4 firms are all floating together: Insulet, Dexcom, Intuitive. These are exciting companies selling high growth solutions, quite large. And you can see they're all relatively valued the same. And then you can go to the bottom and see how these, not really conglomerates, but Medtronic and Stryker are structured similar in that their portfolios of businesses. You can see that they're given a much cheaper valuation. So just to conclude, there's a lot to like about Dexcom. I mean, 84% revenues from disposables is great. There's a reasonable amount of TAM left to exploit, but it's not blue ocean. They're having to fight Abbott for it. And some of their TAM seems questionable, the 30 million type 2 population. But for our own unique situations, we won't be going long Dexcom for the same reasons we're not going long ISRG. But if we ever do, then Nanalyze premium subscribers will be the first to know. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this video today.